Have you ever looked at figures like Warren Buffett and wondered how they built such incredible wealth? It seems almost impossible, doesn't it? But here's the fascinating part. Warren Buffett didn't start with a massive inheritance or a secret formula only available to the elite. He started with relatively modest means. His core strategies, the very principles that guided his journey to becoming one of the world's richest people, are surprisingly accessible. They aren't rocket science, they are based on common sense and discipline. In this video, we're going to dive deep into the wisdom of the Oracle of Omaha himself. We'll uncover the fundamental ideas that shaped his investment philosophy. This is for you if you're dreaming of achieving your own financial goals. Whether it's saving for retirement, buying a house, or simply building a more secure future, Buffett's lessons are invaluable. You'll learn his core investment principles, discover actionable steps you can take right now, and understand how to start your own wealth-building journey. It's about building a solid foundation. So, buckle up. Get ready to unlock your potential for building lasting wealth, guided by the timeless wisdom of Warren Buffett. The absolute cornerstone of Warren Buffett's approach is something called value investing. It's the foundation upon which his entire empire is built. At its heart, value investing is a simple concept, buying something for less than its true worth. It's about finding bargains in the market. Think of it like finding a beautiful antique chair at a garage sale. The seller might be asking $50 because they don't know its real history or craftsmanship. But its true market value might be $100 or more. You're buying it at a discount. In the stock market, Buffett looks for fundamentally strong companies. These are businesses with solid earnings, a proven track record, and a durable competitive advantage that protects them from rivals. He aims to buy shares of these great companies when their stock price is trading significantly below their estimated intrinsic value. It's like buying a dollar bill for only 70 cents. Finding these undervalued gems requires diligent research. You need to understand the business itself, analyze its financial statements, and study the industry it operates in. The goal isn't just to find a cheap stock. It's to find a great company whose stock happens to be trading at a cheap price. You're looking for businesses built to last and thrive over the long term. Once Buffett finds one of these great, undervalued companies, his next key strategy kicks in: long-term holding. He famously says his favorite holding period is forever. Buffett isn't interested in trying to time the market, predicting short-term ups and downs. Instead, he buys shares in excellent companies and holds onto them for decades, allowing them to grow and compound in value. Think about his long-standing investments in companies like Coca-Cola or Apple. He didn't buy them expecting a quick flip, he bought them as ownership stakes in businesses he believed would succeed over many, many years. This strategy is based on the understanding that great companies will continue to innovate, adapt, and increase their value over the long haul. They can weather short-term economic storms and market volatility. Holding for the long term requires immense patience and discipline. It means resisting the urge to sell during market dips or chase the latest hot trend. You trust in the underlying business. It allows the power of compounding to work its magic, where your returns start earning returns themselves, accelerating your wealth growth over time. Another critical principle for Buffett is the margin of safety. This is all about minimizing risk in your investments. Imagine you're building a house. You wouldn't just use the minimum amount of support required, you'd add extra beams and stronger materials to create a buffer against unexpected stresses or errors. That's a margin of safety. In investing, Buffett applies this by only buying stocks when their price is significantly below his conservative estimate of the true value. This buffer protects him if his valuation was slightly off or if the market experiences a downturn. It means you're not paying full price, or even fair value, but a discounted price that provides a cushion against potential losses. It's a core part of his risk management. Coupled with this is his principle: focus on what you know. Buffett is famous for avoiding investments in industries or companies he doesn't fully understand. He doesn't chase speculative bubbles or invest in complex businesses whose fundamentals he can't grasp. He sticks to what makes sense to him. For beginners, this is incredibly valuable advice. Start by researching companies and industries you are already familiar with. Think about the brands you love, the products you use daily, or the services you rely on. Understanding the business is the first step to valuing it. Don't feel pressured to invest in something just because it's popular or sounds complicated. Stick to your circle of competence. Now, you might be thinking, okay, that's great for Warren Buffett, but I don't have billions or a team of analysts. The good news is, you don't need them. Buffett's principles can be applied by anyone, starting small. Here are some actionable steps you can take right now to begin your own wealth-building journey. Actionable step 1. Start small with low-cost index funds. You don't need to pick individual stocks initially. An index fund, like one tracking the S&P 500, gives you instant diversification across many companies. It's a simple, low-cost way to own a piece of the market. Actionable step 2. Set clear financial goals. What are you saving and investing for? Retirement, a down payment, financial independence. Having specific goals helps you stay motivated and focused on your long-term plan. Actionable step 3, save consistently. Even small amounts saved regularly add up significantly over time. Automate your savings so a portion of your income goes directly into your investment account each month. Consistency is key. Actionable step 4, reinvest dividends. Many companies pay out a portion of their profits to shareholders as dividends. Instead of taking this cash, choose to automatically reinvest it to buy more shares. This accelerates the power of compounding. Actionable step 5, learn continuously. Investing is a lifelong learning process. Read books, follow reputable financial news, understand basic financial statements, and educate yourself about the companies or funds you invest in. Knowledge builds confidence and improves decision-making. Let's quickly illustrate the power of compounding. If you invested just $100 a month consistently for 20 years and earned an average annual return of 7%, you would have contributed $24,000 of your own money. But thanks to compounding, your investment could grow to over $52,000. That's more than double your initial contribution, purely from growth on growth. So, let's recap the core wisdom from Warren Buffett that can guide your path to wealth. It's about value investing, buying quality assets at a discount. It's about long-term holding, having the patience to let your investments grow over decades. It's about applying a margin of safety to protect your capital. And it's about focusing your investments on what you truly understand. Remember, investing is not a sprint, it is definitely a marathon. Building wealth takes time, patience, and discipline. There will be ups and downs in the market, but staying focused on your long-term goals and principles is crucial. Don't wait to have a large sum of money to begin. Take action today. Research a company you admire, open a low-cost brokerage account, or set up an automatic transfer to an index fund. Start small, but start now. We'd love to hear about your financial goals. Share them in the comments below and join the conversation. If you found this video helpful, please give it a like. Subscribe to the channel for more financial wisdom and educational content. And share this video with anyone you know who wants to start building their financial future. Let's close with a timeless quote from Warren Buffett himself. Someone's sitting in the shade today because someone planted a tree a long time ago. Start planting your financial tree today. The best time to start was yesterday, but the second best time is right now. Thank you so much for watching. We'll see you in the next video.